Hello, hello everyone. Let's wait another 30 seconds as people are still joining the webinar. So, hello everyone and welcome. My name is Eric Tranley. Neil Karkoff from Ceylon and myself will be your hosts for today's webinar on a path to modern AML compliance. Neil, why don't you introduce yourself?
Thank you, Eric. Yes, my name is Neil Karkoff, and I head up the risk and compliance practice at Ceylon, and have been writing about AML technology for 17 years now, since 2002.
Thank you, Neil. So I'm Eric Tranley. I'm the VP of Product Management at Guardian Analytics. I will be the moderator for this webinar and will also participate in the Q&A session. Some quick housekeeping before we go right into the webinar. Today's session is being recorded. You will receive a URL link notifying you if you want to watch this session again, or send it to your colleagues if they want to be watching it. The presentation slides are in attachment, as well as the Ceylon white paper on the path to modern AML compliance. Please ensure to have one BrightTalk session open, browser session open, otherwise you may have some echo. If you have any questions today, there should be a question box where you can enter them and we'll address them either live or by email. You can request live support from BrightTalk should you encounter any technical issue with the webinar itself. And please rate and suggest content to improve our webinar. Let me read quickly the safe harbor before we start. The following is intended to outline our general product direction. It is intended for information purposes only and may not be incorporated into any contract. It is not a commitment to deliver any material code of functionality and should not be relied upon in making purchasing decisions. The development, release, and timing of any feature or functionality described for Guardian Analytics product remains at the sole discretion of Guardian Analytics. So without further ado, let's get started with Neil's presentation.
Thank you again, and thank you everyone for joining today. I'm going to be talking about basically how to achieve next generation AML compliance. To tell you just a bit about Ceylon, we provide focused research and advisory services on the use of technology in the financial services. The risk and compliance practice looks at financial risk and also operational risk. Financial crime research, technology research has been a big part of what we do over the years, and RegTech as well for the last 5 years or so has been a major focus. So, the path to modern AML compliance. Essentially, it's possible today. Next generation technologies are transforming AML compliance as we speak. Cloud platforms can provide efficient access to these advanced technologies. Some of the most important ones are big data analysis and, crucially, data lakes. Using structured but especially unstructured data, and especially making use of the massive amounts of external data available today to add intelligence and reach to your AML analysis. Advanced analytics and machine learning are extremely important, being used at all stages of the AML value chain, the technology chain, the operational processes there, and also very crucially in real time, which is increasingly important, services and lifestyle services. Also, open integration of your internal systems with modern AML technologies, including cloud-based technologies. If you are an institution of any size, you might find yourself needing to hook things up. At a minimum, even for smaller institutions, you want to hook up your own internal systems with a good, solid next generation AML solution. And particularly perhaps for the vast majority of banks really that can't support their own AI and data science operations, cloud-based solutions are going to be the path forward to achieving next generation AML compliance. So AML technology has evolved quite a bit over the past 15, 20 years. It has become quite complex and sophisticated with model rule management, a lot of domain expertise going into scenarios, scalability. But nevertheless, banks are still facing difficulties in achieving, one, efficacy, for example, in finding suspicious activity and actually having insights that lead to action, and two, efficiency, so being able to investigate alerts and not being overwhelmed with false positives is a major issue there. These things matter because the AML compliance burden keeps on growing. Transaction monitoring watchlist systems generate mostly false positive alerts, often more than 90%. And compliance operations teams have to investigate and close these in addition to the real alerts. And this is probably the largest reason for operational bottlenecks. And crucially, sadly, this leaves fewer resources available for real value-added investigation. Also, as we all know, new regulation keeps on coming. In the U.S., the new CDD rule is a great example, requiring banks to identify and perform due diligence on the beneficial owners of accounts. This creates a lot of new operational challenges. Incumbent technology tends to have the functionality gaps of these sorts that expose banks to AML compliance risk. Now, the headlines or the attention-grabbing fines are often very large fines for top-tier banks, large international banks, U.S. operations, and things of that nature. But other banks are also hit with fines and regulatory actions. Regulators have issued consent orders, imposed fines on a steady succession of banks for inadequate AML programs and procedures, and some of these fines have ended up being life-threatening, where after a bank is hit with a large fine, especially if it's a modest-sized bank, they might go out of business, be acquired. They might even lose their charter with some actions. And all of these things have happened over the last 5 years. Large banks can have hundreds, thousands of AML analysts to basically throw bodies at these issues. But at most banks with teams that are probably 20 AML staff or less, moreover covering both AML and fraud, it's a little more difficult. But help is on the way, and that's getting back to our theme today. Next generation technology has been shown, and so let's witness some of this, to improve efficacy and increase efficiency in AML operations. But supporting these advanced technologies in-house requires resources that really only the very largest institutions can support. On-premise deployment, proprietary development of advanced compliance solutions is out of reach for most banks and credit unions. And this is why cloud-based delivery of advanced AML technology is so important or holds so much promise for helping banks achieve next-generation AML compliance. So looking back a little bit over the last 15 years at how AML technology has developed, and we call this the incumbent world. You might want to use the word legacy. Basically, it's a matter of rules and analytics, logical, fairly limited approaches to discovering suspicious activity, perhaps some fairly basic data visualization tools to assist in investigation and hopefully increasing the efficiency there a bit. Also, maybe in the incumbent world, we can even point to more advanced analytics being used. So statistical or predictive analytics that can identify patterns, correlations, clusters of activity. These technologies have been around for a long time. But incumbent AML tech still has a number of challenges and limitations. Typically, the rule sets are fairly inflexible, hard to personalize or customize to capture bank-specific risks. Really almost all of the incumbent solutions have a very limited ability to capture unstructured data in a meaningful way, to analyze it in a meaningful way, and that includes large areas that are very important in modern AML compliance, such as negative news, PEPs profiles. Sure, you can do a name search, but it's hard to pull together information in a contextual way. This type of unstructured data is becoming more and more important in accurately assessing customer risk, not only at onboarding, but also throughout the customer lifecycle. Incumbent technology and most operations at banks tends to rely on very manual customer onboarding processes, which delay account opening, and as we all know, can have a negative impact on the customer experience. For corporate banking, and this includes SMEs, which are a very large part of, I think, many of our businesses, business operations on the corporate side, it's particularly difficult to efficiently open an account, and especially now with the CDD rule, that's making things even tougher. But things are continuing to evolve, and now we have more advanced technologies such as robotics, AI and machine learning, natural language processing and natural language generation, and luckily the all-important unstructured data analysis, meaningful contextual analysis. All of these technologies are now becoming available, and AML technology is definitely in the next stage of evolution. Overall, on the behavior detection side, transaction monitoring systems are moving from static analysis of largely structured data to a more dynamic analysis that can also make use of unstructured data and using sophisticated algorithms and machine learning to really up the game. Some of the use cases that we're seeing for next generation technology, they really stretch across the entire value chain for AML compliance, including real-time customer risk profiling for onboarding, using unstructured data analysis again. Machine learning can automate data gathering from many external unstructured data sources, compile profiles using these sources, and automate risk scoring, customer risk assessment and scoring. Looking at beneficial ownership, including on the SME and corporate side, it is possible using advanced technology, robotics, and again, unstructured data analysis to automatically gather and assemble information on BOs from internal and external sources. Advanced link analysis, interactive link analysis can show relationships and transactions among beneficial owners. ownership percentages. Quite a bit of information can now be accessed very, very quickly using new technology. Dynamic risk scoring and perpetual KYC. This, for us, refers to both the ability to use the automation and assisted automation capabilities of new technology to enable much more frequent customer review checks, even daily customer review checks for institutions that are trying to do that. Dynamic risk scoring to us is basically combining the KYC and the watch list information and outcomes with transaction monitoring, behavior analysis to capture changes in customer risk profiles, whether those occur from a watch list or a negative news hit, or whether it's a heightened risk deriving from an alert in the transaction monitoring, basically having a feedback loop there to achieve more accurate results and timely results on both sides. False positives reduction, again, perhaps the biggest roadblock in AML compliance operations, is combated by advanced technology, I'd say, in basically two ways. One is the next generation analysis, let's call it AI, and other advanced analytics that can be more effective in actually uncovering suspicious patterns. But for all of those many false positives, machine learning can learn based on previous actions and predictive analytics, which ones can be closed, either low touch or perhaps in a completely automated way with a high degree of confidence. Finally, on the regulatory reporting side, again, intelligent automation, so assembling data from the investigation and then using natural language generation even to perhaps write part of the narrative for a SAR filing, for example, is possible. And depending on how an institution wants to approach it and the technology they're using, this can be highly automated or can be an assisted model where recommendations for the SAR content are pitched to the analyst for review and perhaps additional work if needed. So in these, and I'd say many other ways, next generation AML tools have been shown to improve efficiency in alert investigation. Based on case studies, and this means Celent going to financial institutions, and hearing what they're doing in their explorations with this new technology, we've estimated that next generation technology can potentially reduce false positives by 30%, actually more even, increase the low-touch closing of alerts by 40%, also even more even, and improve investigation efficiency by 25 to 40%, let's say. And again, this is very important, not only in helping banks get a handle on the operational burden, but also freeing up analysts so they can work on more important stuff that really requires their expert judgment instead of spending a lot of time closing false positives, which don't add much value. And again, it's very important, I think, to keep in mind that with the growth of digital financial services, many banks are adding and increasing the sophistication of the mobile offerings, for example, hooking into third-party payment or other consumer services. Real-time response is crucial in enabling the new digital world for consumers in finance and consumer services. and next generation technology can help with that. That all sounds great, but how is the average bank going to get their hands on this technology? And one of the most promising ways, again, is through cloud delivery, basically software as a service delivery. We see cloud as revolutionizing technology delivery overall. Again, this can be seen in consumer services, digital lifestyle services. Cloud basically, commercial cloud, advanced commercial cloud basically provides access to high-performance computing, almost unlimited data storage, and very crucially, tools to support advanced approaches such as AI, big data analytics, machine learning. Cloud is definitely behind the fintech and digital lifestyle services revolution, and in the same way, it's also enabling a new generation, next generation of compliance technology. Cloud supports the 3 V's of big data. That's volume, velocity, and variability. Basically, cloud provides a very powerful platform for next generation technology, supporting high volumes to enable data lake-based big data analysis. Effective behavior detection requires analysis of large amounts of internal transaction and customer data, as well as external data. Risk assessment, especially on the KYC side, depends on analysis of this external data, like adverse media, again, which further increases data volume needs. You need that capacity to enable modern AML approaches. The second V, velocity, enables real-time monitoring and screening, and as just mentioned, speed in analysis and response is becoming much more important across the AML value chain. Seamless KYC processes result in less friction in onboarding and an improved customer experience. And again, digital financial services are leading to increased requirements for real-time in AML and KYC processes. And the third V, variability, in the AML context, can refer especially to unstructured data analysis. Again, extremely important in deriving more advanced and accurate insights, whether it's on the KYC side or as an input into behavior analysis. And natural language generation, again, can help with compiling KYC profiles, can help with entity resolution, and other aspects of the value chain. Looking at some of the more meat and potatoes benefits of cloud deployed solutions, software as a service solutions, basically total cost of ownership looks good. It's another advantage. You get access to this advanced technology on a mutualized, cost-effective basis spread across all of the customers of your provider. Typically a very large reduction in implementation costs, the ability to move from a fixed cost operational model to variable costing, very often lowering TCO. And with a modern native cloud solution, you don't worry about updates anymore. The provider works on continual improvement of the solution, hopefully continually adding new technology, and those updates are seamless and they don't require anything from the SaaS user to benefit from them. So these total cost of ownership benefits are very important. But again, maybe the most striking thing is that cloud can provide access to next generation AML technology without the need to build these capabilities in-house. The technology can be updated seamlessly by your provider to handle new problems such as new regulations like the CDD rule, maintaining external watch lists and external unstructured data feeds, which are becoming very voluminous in order to be effective. And cloud can also help support compliance activities across an expanding regional footprint. There's been a lot of M&A and a lot of growth, regional growth in the U.S. With banks and credit unions, and cloud can help bring in this expanded footprint into your compliance framework quite seamlessly. So in a word, cloud offers a path forward to the next generation of AML technology, providing gains in both operational efficiency and improvements in insights in compliance efficacy. So this all sounds great, but is it really happening? What do the regulators think? Is it secure? I think what we can say is that AML technology is at a critical inflection point driven by unsustainable operational costs and inefficiencies created by incumbent systems and operational models. The development of new technologies like machine learning, like cloud delivery, are definitely showing results in improving the situation. So it looks good. What do the regulators think? Well, very significantly, regulators actually worldwide, and this has also happened in the U.S., with a very striking statement from a group of bank regulators in December. They're encouraging banks to consider innovative approaches to, quote, replace or augment existing BSA AML processes, unquote. And behind the scenes, regulators have been active in working with banks as they implement these new technologies. In terms of cloud solutions, Celent recently tracked 3,000 in production transaction monitoring systems in the U.S., and 1/3 of those are in the cloud. So use of cloud is already a fact. Eric, over to you for your information about Guardian Analytics, please.
Thank you, Neil. I'm going to talk about the need for AML, the need for a single financial crime repository. We're on slide 18. So, like Neil told you, I mean, it's the need for volume, velocity, and variability is very key for AML. Minimum 5 years of record-keeping requirements for any evidence filed in a SAR at date of filing requires a lot of large storage volume, especially if you need to store videos, images that are part of the SAR. And conventional storage technology, for that matter, is actually not adequate at all. It's very expensive. It's actually almost impossible for actually any corporation to store petabytes of data in a very economical fashion. Whereby on the cloud side, cloud storage, for those of you who want to learn about object storage, these are very cheap, economical way of store petabytes of data. And this is exactly what Guardian Analytics has been doing with the infrastructure. We have an evidence lake, which is a big data lake that is in itself a single financial crime repository. It allows for you to have what we call the 3 V's in big data, so volume, velocity, and variability. Velocity on AML is about real-time monitoring of any transaction across digital and payment channels, but also about real-time screening as part of identity verification and watch list checking. This AML architecture is able to incorporate identity verification of the parties to a transaction and run the identity against a comprehensive set of watch lists in real time or near real time, since most of the names are added to watch lists and deleted constantly. In terms of variability, you need to be able to ingest what we call structured data and unstructured data, but mostly it's about transaction. These are structured data. Lists of political exposed person, perhaps these are structured data, but you need to also incorporate, security videos, check images, And all that's part of the evidence filing process, and again, keep them at minimum 5 years. And therefore, we have built Guardian Analytics Evidence Lake as a big data lake, which enables a single financial crime repository. Now, let's move to the comprehensive AML functionality and the modern AML platform. This infrastructure is an open platform, as you can see in this visual. It's a big data lake that allows you to interface with third-party systems, one of which the most important is the FinCEN e-filing system, but other also OFAC list, external source of data. Other systems, from identity verification to 314B, for example, you have a slew of cloud-enabled AML systems that are very modern that can be integrated with this platform very easily. But more importantly, it has a comprehensive AML functionality that makes it easy to AML teams to comply with BSA AML programs, Patriot Act 314A, transaction monitoring to comply with Final Rule 504, watch lists, CTR to comply with BSA reporting cash transaction, and of course SOAR e-filing to report entering to FinCEN. On top of that, we have new KYC capabilities, such as real-time CDD, EDD, to allow you to perform, customer identification program compliance, part of Section 326, and new beneficial ownership rules. So it's not only a big data lake with a lot of modern technologies for you to store structured and unstructured data, a very high volume, allows you to do real-time velocity and variability, but it is also a full-blown AML system. Let's move to the key benefits. So I spoke about the 3 V's, so volume, velocity, variability, so I'm not going to spend too much time, but it's important to understand that this is not possible with any conventional system. They are built on a relational database, on-premise, very expensive cost of storage, not to mention the cost of servers. And that brings me to the second line. We are delivering this big data cloud evidence lake in a SaaS model. There is no hardware, no software for the customer to worry about. So no upgrade, we manage that for the customer. And more importantly, the whole cloud storage, multi-year structure evidence. So by default, we give you enough storage for 5 years of storage. Now let's come to probably the most important part, which is why this modern technology in terms of big data is important. And this is important because choosing the right solution in ML with what's happening in terms of increased money laundering scheme, sophisticated money laundering scheme, can make or break the ML compliance program. There are many canned solutions on the market out there, but most of them come with rule-based automation and some statistics and have a lot of limitation. And often teams are still focusing on data collection and entry instead of going to the next step, which is investigative work and have key insight for risk assessment metrics. So these are constraints which can be alleviated if you have a combination of self-service configurable AML rules and scenario. We do know that AML rules are deterministic. They're actually most of them defined by the BSA program. So they, by definition, because they are rules, they have statics, upper bounds, and lower bounds, and the rules themselves are static, which means that they need to be constantly tuned. Otherwise, you're going to have a lot of false positive. I think it's industry survey shows about north of 90% of false positive. And what we are offering here is the ability to combine configurable AML rules and scenario with machine learning. So what's the principle here? Knowing the high level of security of AML data, both from the PI data and even the SOAR filing system, what we want to produce is the ability to not to disturb or disrupt the core AML system, but to complement it. And the main idea is to complement it with modern technology like machine learning to scale known money laundering schemes. So the current AML team has already flagged AML alerts, work on SARs, and that expertise needs to be scaled because they have more and more alerts coming, AML alerts, and they have only 30 days to answer. So the idea is to capture that expertise and be sure that it's accurate and be able to scale it. So in other words, the same team or the same level of resource can do way more in terms of AML alerts. Then the second path is to use advanced machine learning to detect unknown money laundering schemes. In other words, there's a lot of hidden data and that can only uncover with sophisticated modern technology. And that would be the second phase of machine learning in the AML Evidence Lake platform. Now, in terms of implementation, the first step is to address the customer risk rating. So, there's a lot of false positive in customer risk rating, and it's not even connected to transaction monitoring. So what we have decided to do is at least to provide a real-time CDD, EDD, so that the ML team can increase the efficiency of the customer identification program. So the first step is to have a dynamic KYC form because of the new regulation and some new location regulation. You want to have different type of KYC form. And this is just not possible in a legacy system. Here you can simply create new KYC form on the fly and connect it back to the risk scoring, the customer risk scoring. The customer risk scoring itself are configurable. They have rules, they are rule-based. They have also risk factors that are totally configurable so that the ML team doesn't need to spend enormous consulting fees to adjust to new regulation or decide to put new questions in the KYC form. And it's connected to the link analysis so that the CDD relationship investigation have a customer 360, whereby you can see a single risk score coming from various risk factors themselves being fed either by the payment channels, the digital channels, or the KYC channels. And that's a very important step in terms of customer risk rating. So to summarize, our AML Evidence Lake platform, it's a big data lake with modern technology that allows you to combine self-service rules configurability with machine learning, and it's implemented in a way that it doesn't disrupt existing system. So you can decide to transition to a modern technology without having to do a full revolution. So that concludes our part. Let's go to the summary page. So to summarize the path to modern AM compliance, and Neil, please chime in whenever you want. The necessary to have a single financial crime repository based on the data lake where you have the 3 V's. So volume, variability, and velocity is key. The consumption of large and various structured and unstructured data is unnecessary because a lot of informational sources are coming from external sources, not only from the transaction monitoring system with the bank or the customer identification program, but it comes from intelligence that are either gathered globally or within various intelligence sources in the United States, and it needs to be fed on a regular basis. Real-time advanced analytics is key not only for transaction monitoring detection, which is a bit of an innovation in ML because most of the ML processes are batch and not real-time. But because of the speed of money laundering, actually, right now, the fast detection is key, and you need not only to detect transaction monitoring anomalies quickly, but you also have to do real-time screening. Last but not least, open integration. Best of breed open integration is key here. Neil talks about natural language processing. There are actually out there systems that allows you to offer a case based on natural language processing. These are very sophisticated systems. And as you can benefit from the integration of very modern system with Guardian Analytics evidence lake, but also with third party that are investing a lot into innovation around AML with an open integration, then your AML team will be able to have very modern capabilities to handle very sophisticated money laundering scheme. That concludes this session. Neil, you want to add anything before we move to the next slide?
Only I think that it's really important to understand that the very largest global banks have been working with technologies like these, both developing them in-house, but also using vendor-supplied solutions. But also regional banks are also moving in this direction. Using the power of advanced technology, typically for a regional bank supplied by a third-party vendor, to achieve the same sorts of really extraordinary improvements in definitely efficiency and often in insight and accuracy as well.
That is actually very true. And I think you mentioned, Neil, that banking regulators have invited the banks to test, modern technologies such as AI, machine learning. And we would recommend, if you want to test a new technology in AML, to talk to FinCEN. And they have programs right now for you to test those technology. And we have at Guardian Analytics program for you to come in and test your data sets against our technologies to understand, how real the benefits are. And this is something that can be coordinated with the regulators. So let me move. So let's go to the Learning More session. So we have a series of webinars on our Guardian Analytics Brightalk channel, both on the fraud solution side, which is machine learning, behavioral analytics, and the ML side. We're inviting you to go and watch them. And we will open the Q&A session now. So we have a couple of questions here. Let me address them. So here's the first question. What evidence do you have that AI works? Neil, do you want to take this since you have a perspective on the whole industry?
Yeah, I think it's important to realize we're not just making this up. That's something I think one of our key approaches to research is talking to the organizations that are using technology. We've spoken with a number of financial institutions that are exploring next generation technology. We've got some case studies actually approved by large global banks that we've written on this kind of stuff, and we see the successes that they report. We see that the advancements are real. As I mentioned just a minute ago, it's the largest global banks that maybe a few years ago were pioneering next generation technology, especially in-house with their own data science teams, but also experimenting or exploring the use of third-party solutions. And now we see that moving towards regional banks, which are also making use of, again, third-party solutions in their case. And these things work. As I sort of implied just a second ago, there are areas that are definite sure hits, let's call them, low-hanging fruit, like auto-closing false positives or sending suggestions for closing to analysts if the bank doesn't want to have machines doing it 100% automated. prioritizing false positives, that sort of thing. Maybe next up in the complexity, in terms of complexity, is assisted creation or automated creation of customer profiles for KYC purposes and risk scoring. And then perhaps the most advanced area, and the one that definitely is also showing a lot of improvements, but depends much more, I think, on the individual bank's risk profile and the situation with their data management and that sort of thing, is the use of advanced analytics and AI and machine learning and transaction monitoring itself. But we've seen definite success stories with all three of those complexity levels.
Thank you. So we have a questions here coming from the audience. Are the pertinent KYC and CIP, Customer Information Program, documents held within the system can substantiate the client's information? Just wondering if I'm interpreting this right. If the question is from the KYC, so know your customer information, and let's say you have an identity, last name, first name, social security numbers, address, and all that. Are you able to correlate with the client banking information, transaction banking information, if that is what this question is about? This is actually a very good question, because as you may know, one of the biggest challenge when you have a core banking system that happens to have DDA accounts and you may have various channels with various systems. So that right there, you need to correlate already the customer name to those various channels, and that's a challenge. Now, when you come with KYC information on top of that, where you have first name, last name, and you need to be able to see, okay, look, I need to correlate the KYC and CIP information and the risk score, the customer risk score, the customer risk rating, to the risk of the transaction itself. That can only be done if you have a big data architecture. In other words, as you stream those various data sources in, each of them having their own kind of data elements per se, you can create, within modern technology with big data, you can create a global ID to link them all together. And that's what our infrastructure is ready to do. In other words, we can work with the banks to create a global ID that links the KYC, CIP documents to a customer name that has enough unicity to link back to the various transaction channels, payment channels, and provide a customer 360. So it's enabling it. We're not saying that it's straightforward out of the box, but it's enabling it, whereby with legacy system that is almost impossible. Anything you want to add, Neil, around this subject?
Only that I think basically the improvements in APIs can help a lot with interoperability or interoperability of back-end systems, and at a bank with multiple lines of business, that can definitely come in handy when you're trying to feed different sources, not just into your AML system, but perhaps also integrating with front-end systems in those different lines of business. And if you're doing partnerships with fintechs, payments, things like that, that more seamless connectivity of modern APIs definitely comes in handy. And again, this sort of interoperability, interconnectivity is really extremely powerful. It's basically enabling fintech, if you think about it. And the same sort of open structure can help internally, not to mention externally.
Thank you, Neil. We have another question, which is more a statement. FYI, working AML alerts isn't an immediate issue to address, but working fraud alerts is an immediate issue to address. I don't know who asked this, but that, I'm glad that that question was raised. Guardian Analytics, I didn't introduce ourselves, but we are a pioneer in fraud detection with machine learning and behavior analytics. So we are very well knowledgeable on the criticality to dispose fraud alerts and create the right fraud case. Now, why this question is important is we do believe our observation is these are two different processes. I know out there people say that there may be a single system that does it all, but fraud team has almost different needs. Where as the fraud alerts are coming in, the ability to respond quickly and dispose them quickly or create the right case is totally critical. In the case of AML, the investigation is actually more important. Gathering the right evidence so that downstream law enforcement can go towards prosecution is actually even more important for FinCEN. So in other words, I wouldn't say that there are any immediate issue versus the other, any prioritization. It's just that these are two processes that needs to be engineered almost in parallel. Now, where the intersection lies is we do believe at the transaction monitoring side. At Guardian Analytics, when we observe the AML rules, so not the structuring rules, there's a lot of deterministic rules that we understand, but and what we've been doing in fraud in terms of velocity of transaction and anomalies. When you think about it, I mean, if someone goes under the $10,000 rules for structuring, then you're not going to detect it. Whereby in fraud, with velocity transaction, we would detect those anomalies very quickly. So on that point, yes, there's a conversion in the transaction monitoring where a lot of anomalous transaction, which pattern can be associated to structuring, could be detected with machine learning with the same type of algorithm, unsupervised algorithm and models that we have with risk factors for both fraud and AML. I don't know if that answers the questions, but it's just a different set of workflow that has to be engineered in their own way. And there is, in transaction monitoring, definitely a convergence of machine learning and detection methods that would benefit both teams.
If I can add to that, maybe not add to it, but give it different come at it from a different perspective. There's definitely convergence between AML and fraud on the regulatory side as well. So regulators are seeing basically fraud for what it is. It's producing illicit funds, and then they're laundered. So it's the perpetrators are one and the same, whether they're operating at one and the same bank. For those purposes, that's a different question. But that regulatory scrutiny and also just the fact that they're interrelated is leading some banks to at least source their AML and fraud platforms from the same vendor. Maybe half of banks are doing that now. And sometimes using one and the same solution if it has that capability. If not, perhaps using a case management system to work alerts from both streams together. So certainly not all banks are doing that. Smaller banks are kind of doing that by compulsion, just because their teams are smaller. But the trajectory, I think, is towards convergence, not just from a operational point of view, which might be the last thing to go, but from a regulatory point of view, which is exerting pressure now, and from a technology point of view, which I think there's been a long, sort of slow-moving trajectory towards convergence on the technology side.
Yes, I mean, it's good you mentioned that. Actually, the big data lake we have, the evidence lake, can ingest in our own Guardian Analytics fraud detection. So we have that convergence for the banks that would like to consolidate. But we are still, it's up to them. I mean, we're not there to decide which organization is the best. We do know from a process flow engineering, these are two specialized flows. No matter how you execute on them, you could have the same resources, the same queue, per se, on the analyst side. to once you do the right triaging, because at the end of the day, you need subject matter expert on each fraud use case and money laundering use case that are very different. But as long as those processes are engineered and you can use the same platform, then the efficiency is being gained, both from the fraud analyst side and the ML side. The rest is just more about capacity and organization. But as long as the processes are being engineered, there's not a notion of a single site, single tool, really. For us, is how the best of breed can be brought together so that the queues itself and the triaging is important, can go either fraud or ML, and within fraud and ML to various roles. So we are at the top of the hour. We will, email to you more information about the white paper. And please feel free to contact us at success@guardianalytics.com. And if you have any information with Sealant, please contact esullivan@sealant.com. Thank you, everyone.
Yes, thank you.
Thank you, Neil.
Thanks, sir.